Okay, I think so. We are live. Cody will be joining in very soon, but good morning, good afternoon, good evening to everyone. Welcome back to the L1X webinar. Um, Interesting 2 weeks, a lot of work, and very interesting, 2 weeks because we are very excited for what's to come next. And I can't wait to tell the community what we have been working on and how we are going to open up the floodgates for the release pool. How about you, Mike and Leo? How was your 2 weeks?
Yeah, weeks have been busy. We, released the token builder, and you can see the number of, there have been like few projects, few users who have built their tokens as well, and pushing towards the DEX pools that will be coming out now. So like,
Yeah.
it's full on. Yeah.
Yeah, very busy for me too. We literally just jumped off. I've left Cody on the call with some guys we're working with on the deck side, and had a whole bunch of other ones going on with. There's the videos that are going out, all the other things. What else is there? The Pipe G guys. There's been a lot going on. Yeah.
Yeah. Yeah. Okay. I think without delaying it further, let me just share my screen and probably let's just get started with it. Yeah. All right.
Absolutely.
Okay. I think so. My screen should be on share mode now. Yeah.
Yeah. Can see.
Okay. Perfect. All right. I think first things first, let's just clear up, what we launched in the last 2 weeks. So L1X did get listed on CoinDCX as we promised, and we are doing it in two different phases. So there is CoinDCX, which has its own main app, and they also have a Web3 version of their wallet, which is called Octo. So at the moment, we are listed on both the applications, and the users in India can navigate to the Web3 version of the CoinDCX app and search for L1X and buy that, or you can download the Octo wallet and search for L1X and buy it as well. So both the ways you can use the Indian payment method, which is called UPI, and buy the L1X coin. And we are waiting until next week where we will be starting some marketing with the CoinDCX team. I have asked them to hold on because we have the DEX coming up and we want to align the marketing of CoinDCX along with the DEX as well. So good things over there. And just another information to the community, we have officially been approved to list on one of the biggest exchanges, not one of the, actually the biggest exchange in Indonesia. And of course, we are negotiating the listing fee with them, which is pretty steep, but we have been approved to list over there. So it's pretty exciting. I think geographically, we are covering up, regions where we do believe the crypto traction is solid. Not only the crypto traction, but the altcoin adoption is also solid, and we'll keep pushing. We also upgraded Xtalk. So all the new projects that are going to come and build with us, and also who are already building, they need the Xtalk infrastructure. So we have taken, a lot of review and feedback from these guys, and we have updated the Xtalk infrastructure. It is actually now, twice as fast to build on the Xtalk infrastructure, and that is the review we have got from the projects actually that are building with us. 5 times faster than bridges. I mean, it was already fast, but it's, faster than bridges right now. And once these projects launch, you'll actually see, how the Xtalk infrastructure is, letting these projects actually kind of abstract away that network fragmentation when it comes to, accepting assets or even letting their users from other networks utilize these applications that they're building on L1X. So the development team has been working very hard overnight. Lionel has been burning the midnight oil. I think they definitely deserve, the appreciation. In terms of the 2025 strategy, and there's quite a bit going on. We're not going to deny it. There's quite a lot going on, and I think it was, it made complete sense to put it all into a single document. So if you have not read the 2025 strategy document, I highly recommend reading that, or maybe just go on to the latest X post today, where we actually created a video on the strategy blueprint that we are following, and each and everything mentioned in that strategy, you'll see today, with certain information that you did not know before and certain features that we are launching up in terms of increasing, the adoption of the protocol. It could be, increasing the inflow of assets coming into the protocol, increasing the value that the release pool will get. Each and everything will add up once you read that strategy doc. It is a big read, but I think it makes complete sense if you just go through the video and read the document at least once. Okay, I think Leo, if you want to go ahead and explain the token builder.
Yeah, so we released the token builder last weekend. You can see, like, there are 100 plus tokens all like were minted on the network in, like, as soon as we announced it. There have been projects coming up as well. They have already minted their tokens. Now, what you can see is, if you haven't created your own token, just go and give it a shot. If, like, there's no code, super easy. It's just, like, few clicks, and we have made the UI so easy that it's simple and understandable to anyone who has not ever tried. So give it a shot. And the new projects coming up, so you will be able to configure your token when you're minting. So, for example, if a project is coming in and they want to, according to their tokenomics, if they have a maximum supply cap, they can all configure that. But initially, mint a certain number of tokens just for security reasons. So these are the things that we have implemented, and it's released. Give it a shot.
Yeah.
What do you, Kevin?
Yeah, no, definitely. And I think, it's one of the first steps that we have to fundamentally take, where, we demonstrate, to the community and to also, the projects, where you could go in and run a script and start building tokens and actually even test the speed of the protocol if you're excited to do that. But at the other end of the spectrum, you've got, community members where, without any knowledge of, learning to code, which you don't need to, you can go in and less than, I think, 60 seconds build your own token. But what is also important is not only with this token builder, what's coming after that, what you can do with this token once you mint it, right? PipeGDAO actually minted their token using the token builder. So, one of the first projects that used it to start their capital raise. So that's good. Now, let's address the elephant in the room, right? I think the release pool. And how are we going to increase the volume? I think it's going to be time to open the floodgates into the protocol and release pool. So, very simply, I think until now, we understand that the release pool was being tested. We wanted to make sure that it does not misbehave. It works exactly how it's supposed to work on, turning the knobs towards a conservative mode. We're going to turn the knob up a little bit now, right? But not only that, we're going to give it another push, a very strong push. So before I go into the Quantum DEX, which is going to actually allow us to bring in a lot of liquidity into the protocol, why is the Quantum DEX important to us, or why is the ability of launching pools, and why are we considering that as one of the biggest push? It's contemporary, but any user wanting to purchase any project token, right, in one click will be automated through the L1X form. So the projects that are actually building with us are going to launch on the Quantum DEX, pretty soon. And anyone wanting to buy these tokens, it could be from Ethereum, it could be from other networks in time. If the price range, right, if the price impact is within the range, and what I mean by that is, anyone wanting to go into the project token has to go through the L1X ETH route. There is no other way, right? So if a user decides that I want to go in and buy $1,000 worth of MIGA token, which is going to be on L1X, or it could be GDAO token, it could be L1X MetaCity, Inside Genesis, all these other projects that are building with us, they have to buy L1X ETH first, and then, and only then, they can actually swap that inside the protocol for the project token. Now, what this allows us to do is, it allows us immediate buying pressure on the coin. So until now, we were the only ones marketing the L1X coin towards users coming into the ecosystem and purchasing it. But moving forward, all these projects trying to sell their coins will indirectly put a buying pressure on L1X ETH, right? Now, what that means, whenever there is a buying pressure on L1X ETH, we know what happens. Immediately, the release pool gets activated, right? Now, let's say, we are working on building liquidity, on the Uniswap pool in time. But let's say if somebody comes in and wants to buy a token, that's on the protocol, that's higher in terms of value, and there's going to be a very high price impact. We have created a bypass. So the bypass basically allows us to, not consider the Uniswap pool. It allows us to consider allowing us to directly issue wrapped L1X, which is going to be a part of the Quantum DeX, like how you have wrapped ETH on Uniswap. And we will be able to issue that to the user directly, and the user can swap that for the project token. All this will happen in one click. The user doesn't need to know. He's swapping into L1X ETH, L1X ETH to wrapped L1X, and then the project token, right? So we need to put these projects to work, which will actually indirectly result into putting buy pressure on the L1X coin. And we've done some numbers. We'll go through some numbers. We've done some numbers, interesting numbers, right? Now, the big question over here is, why will someone build on L1X, right? Quantum DeX, there's Uniswap, there's Pancake Swap, there's, whatever swap, right? Why will someone build with us? Before I get into that answer, right, let's look at the current scenario in DeFi, right? What's the current landscape? What's happening, right? There is a huge liquidity crisis going on, right? And we could have, of course, gone in and launched a DEX straight up, come up with some fancy stuff in there. But we need to solve the actual problem here, right? And only then these projects are going to come on board. Around 70% of the projects, they actually have liquidity less than $25,000. 70%, right? That's a huge number. Now, what happens over here is, it could be the case where the teams actually do not have the money, number one. Number two, it would be the case that they need to spread their liquidity across multiple places. It could be on CEXs, it could be on DEXs, because if you have 100 grand, immediately start dividing it by 5 to spread that liquidity, right? But by doing that, there is also data that shows that your project survival rate reduces. And over here, you can see that in 6 months of active trading analysis that has been done, if your project token has less than $25,000 in trading volume, the chance of your survival in 6 months is around 30%, right? So this kind of tells us that, okay, there is a correlation between your liquidity and your survival rate. And with the next charts, we'll understand why, there is a correlation as well. So this one talks about the price impact and the trading volume. Now think about it where, if you want to sell a project token, right, and if somebody actually wants to make a meaningful purchase, right, if you have liquidity less than $25,000 and you make even a purchase of, $1,000 over here, right, there's 3.2% price impact straight away, right? And $1,000 isn't going to bring in any liquidity into your pool, right? So if you start moving towards your higher end of the spectrum of actually swapping or buying your token, let's just take 5%, $5,000. If somebody wanted to buy a token for $5,000, you end up with over 15% price impact. Now, this is a huge death spiral. Now, because why is it a death spiral? Because nobody would want to go and do that. And if nobody does that, how do you expect people to earn fees? And if there is no fees, nobody's putting in liquidity into your pool. So there is a death spiral that is being created by doing this, right? And if you consider the average daily slippage by pool size, actually, if you have a pool that's less than $10,000 or $25,000, for users, it's literally cheaper not to trade at all. Yeah. Because by the time you finish off your months, or you finish off the whole month, your value of your coin, if you consider it with the slippage and the profit that you would make out of it, is actually lower, right? So when you put these things into consideration, I think there's a huge gap in the way these DEXs are functioning. Like, even the numbers are centralized over here. Now, if you do a comparison, and we'll come to the Quantum DeX model as to how it works, and how we are actually trying to improvise this, not in years to come, but in 2 weeks. If you have traditional DEX with low liquidity, right, you have to understand one thing, that even if you had adequate liquidity, the biggest challenge over there from launch to survival in 12 months is actually even lower than if you went with the same liquidity on Quantum DeX. Now, why is that so? We'll come to it. But there are two important reasons for that. One of that is the price range adjustment, where users putting in the liquidity or projects putting in the liquidity have to manually go in and keep changing the price range, on and off. Number one. And number two is, how do you prevent rugs from happening in these pools? Of course, you can go and burn the coins, but that does not solve the problem yet, right? Not all the projects burn the coin, compulsorily. It's an option. So how do you, not make it an option and make it mandatory that you can't rug, even if you have, adequate liquidity into your pool? So there is a 38%, or 40% more chances of survival, even if you had adequate liquidity on the Quantum DeX model as well. So just to summarize, 68% of the projects launch under 25,000 liquidity. There's huge trading, friction happening there. It's a death spiral. You're entering into a death spiral because nobody's buying your coin. I mean, $5,000 and 15% price impact, nobody's getting it. Projects with less than $10,000 liquidity have over 15%, only 15% survival rate after 6 months. That's crazy, right? Of course, again, if you think about it, maybe these are punters, these are, projects that do not even deserve to be there, but still there would be projects that are good in there, and just because of liquidity cannot survive. There is a number, right? There is a number for sure. User experience and market inefficiency, we've already seen what happens when you launch with less liquidity. Now, going back, how are we going to solve this, right? How are we going to solve this thing? Before that, Mike or Leo, do you have anything to say, looking at those numbers?
It's actually pretty scary when you look at it with regards to that, the low liquidity and the impact that has, and being able to do that analysis. I think, Kevin, you've done a brilliant job there, showing that, yes, if you don't have the liquidity, it's almost a guarantee that you're going to go into that death spiral. But even if you do have the liquidity, it's not enough. I think that's really important to note, that it actually takes that, not just the liquidity, but the capability as well, and the exposure.
Yep. I agree. Agreed. And I think, it's a fundamental problem where, after speaking to all these projects, right, I was asking them one question as to what is the initial liquidity you're going out with. And all of them mentioned that we're thinking about $10,000, $20,000. And I was like, okay, you've got some funds. And even then you're going out with that number. Now, the rationale was, we got to divide this, into multiple different places as well. So anyhow, how are we going to solve this? Actually, we are going to start by re-engineering how pools are created in the first place, right? And we already have a working product, and in 2 weeks, we will be launching this. So we're going to come up with the first of its kind Web3 zero interest DeFi loans, where a project will come in and they will put in their token address if the project already exists. If the project does not exist, of course, we'll see to that. It is going to be AI-driven analysis where more than 250 variables are being considered. And we'll see what those variables are as well. But more than 250 variables are being considered in terms of how much loan should this project get. Now, the good thing about this is you can borrow against your project token. So, unlike Aave, where you got to be registered with them, to lend and borrow, over here, each and every project token will be valued. Right? A lot of work goes in. Each and every project token will be valued. Our benchmark is under 5 minutes from the time a project decides that they want to go ahead with it. They should be able to access 100,000 plus DeFi users that we've got, and other projects are also bringing along, receive up to $2 million in zero interest token pool loans. This is going to come from the release pool. and also let users from any network swap into their token with minimal price impact, right? So these are the three important things that we need to consider. Now, how does it work? So let's say you already have a token. You go in, you know, put in your token name. It will already understand, it already has a database, so it already knows your token. It's going to go in and run this AI model that we have already built over the last, some time. And this AI model is going to go in and give you exact amount. It's going to give you the repayment duration. It's going to go and build the smart contracts, right? You're going to get a pre-approved loan amount. I say, okay, you can get $50,000, for example, right? And then you mint your token on L1X. It could be with the token builder, or if you want to do it manual, you want to, be a hero, you want to do it manual. Sure, go ahead. And then you can list on Quantum DeX. The moment you list your token on Quantum DeX, creating a pool, pairing it with L1X, the L1X swap will automatically pick up your token and make it, interoperable across any other token as well. So if you go in, mint your token and deploy it on the Quantum DeX pool, borrowing liquidity as well, they will be able to, your users will be able to swap from Solana into your token back to BNB, immediate recognition, no waiting. If you have TGE pending, this is a hard one. So if you have TGE pending, you can apply for a loan where there is a form you'll have to fill up. And that form is also, right now, it's a manual review process, but we will be moving that form also into an automated way of understanding, right? So it will analyze your token. Over 250 plus variables on metrics are going to be used over here. And we'll see those metrics as well. We'll see a snapshot of what it looks like. There'll be an offer generation. So a smart contract offer will be generated for you, everything done through smart contracts, nothing, on the back end. It will set up the smart contracts of the loan for you if you want to go ahead with it. It is going to create the liquidity pool for you. Now, what is the most interesting part is it is going to monitor it on a continuous basis. So if your project starts doing well, your token holders increase, your social sentiment increases, your volume increases, your liquidity starts going up, it's going to actually allow you to maybe even borrow more. But what is crazy is it's automatically going to adjust the price range. So if your token is trading at 10 and now you've taken a loan, and if we'll go through the process, but if you're taking a loan and the AI model says that, okay, I'm going to offer you the loan in between $8 and $12 in terms of the liquidity, but now you're doing well, it can automatically go in and extend that $12 to $15, right? So it has kind of borrowed certain concepts from the release pool, the algorithm, the new one, but it kind of sets it up in a way that it can be scaled. So there is no manual intervention here. You come in, you put in your pool, and what is important is you cannot rug it. The project cannot rug these tokens. They can't just remove L1X out and sell, right, and run for their life. They can't do it. And repayment, of course, the repayment duration will start from 12 months on and up till 5 years, 60 months. Every month there will be a repayment, and if you skip a certain repayment, it will start calling back the loan, right? So there is a it's all on the smart contract. It's all done automatically, and the projects will also be notified that they have to fill in the loan, and the loan has to be paid back in L1X. So that is where the projects will also have to go and buy L1X, to pay it back. How does it work, right? How does it work? Now, I know this chart may look a little scary, but let's just go through it so you understand the tenets of how this flow works. First of all, the project comes in and puts in their token, name, token address, contract address of the pool, doesn't matter. We'll still be able to find it out. After that, the AI model is going to run in and go and analyze it. Right now, the AI model is taking over 100 seconds to analyze. We're trying to bring it down to less than 30 seconds. And once the AI model analyzes, and we'll see in certain screenshots what it looks like, it's going to go and prepare a contract template saying that this is the required Project X token that you have to put in as collateral. This is the initial liquidity price range that we will give you the money for, and what is the L1X repayment duration. So if the project is eligible for $50,000 of loan and the project collateral is $75,000 and the repayment duration is 60 months, these things are put into a contract and presented to the project. If the project accepts it, it moves on to the next stage and says, okay, now you got to go in and deposit your collateral, right? So once the project deposits the collateral, it creates another contract saying that, okay, now that I have received the collateral, let's get the fund ready to deposit into the liquidity pool. How this works is once the project deposits the collateral and deposits the tokens that they want to put into the liquidity pool, an event will be sent to L1X contract saying that the project has satisfied the requirement. Please release certain coins from the release pool into this contract so that we can add these coins into the liquidity pool. Once that is done, this specific contract is going to go in and deposit the liquidity into the liquidity pool. So the owner of this liquidity is now this specific contract, not L1X, not the project. Now, why is this important? This is important because the project needs to have a trustless mechanism, and even L1X needs to have a trustless mechanism that if they do not repay back the loan, if the project's risk score increases, we need to liquidate, right? We need to push that button and liquidate. And the smart contract is going to do it itself, right? So everything is open, and the projects can look at it that if you do not repay the loan, your risk score increases every month, and it is going to be visible to the community members that this project has taken a loan and they are not repaying back. So it's a push for the projects as well that we should go in and repay this money to L1X. So it will, as I mentioned, it's going to go in and continuously monitor, and it's also going to automatically go in and adjust the price range. This concept does not exist until today. We have already built the version 1, and later down the line, we'll see how we are going to launch it in phases. But if you already have a token, or if you do not have a token, you will be able to start your own liquidity pool with a minimum $50,000 loan from L1X, and you will not you will not be able to take it out because it's protected by the smart contracts, right? So the algorithm itself won't let you do it. Once you repay back the loan, so let's say the amount that you borrowed, you have repaid it back. The release pool, coin holders keep getting the amount as they keep repaying back. But once the complete loan is repaid back, the ownership of this specific contract and this liquidity pool goes back to the project, saying that this is your tokens now, you can do whatever you want with it. So we have allowed them to bootstrap. We have allowed them to make sure that they don't rug, right? You can't rug this liquidity. So even the users know that even if I invest in this project, into this liquidity pool, there will be no rug that happens over here. Any thoughts on it, Mike?
I think it's quite unique. I think it's quite amazing. I mean, you look out there and all these projects are going for grants. And to be perfectly honest, I've never been a fan of a grant itself. I feel that it doesn't give the project enough impetus to be able to want to succeed. Having the loan model there actually works a lot better. They'll put that effort in because they know they've got to meet those commitments. I think it makes a huge difference. And the fact that we're just using AI to do the analysis and calculating the collateral, I think that makes that just makes it so much quicker and easier for them to start participating, and should attract a lot of projects, especially the ones that are genuine in wanting to build and not just out there to get grants everywhere and never actually release. We've seen some of those. We've had them through our door. The only thing they're interested in is the grant, so they can just keep building. But when do they deliver? It's always been a problem.
Yeah, I agree. And when I was thinking about this, I had that eureka moment, like when I had it for the release pool, I had the eureka moment. What are we doing? Why don't we do this? Because there's one thing giving grants to projects to come and deploy on yours, but the other one, as to the projects want to do it, right? So I go back to the drawing board and I say, okay, let's look at the liquidity pool on the Quantum DeX in a way that it's a no-brainer for projects to come in and deploy, right? So I think this definitely helps us bootstrap, the projects that can flow into the Quantum DeX. Okay. All right. Can you mute yourself, guys, if you don't mind? Okay. All right. Now, how does, what kind of numbers does this give us? What kind of, analysis can a user also see? So if you take in any token on Uniswap, Pancake, Aerodrome, Velodrome, slowly we will integrate all of them. But we're going to start with Pancake and Uniswap. So you as a user, you go in, right? You go in and you punch in this, token name over here. You'll get this dashboard where it's going to go in and show you what the TVL is, what the price is. And after that, what is important as well to understand is that there are certain performance insights that you will get. Meaning, what is the liquidity score? What is the volatility score? What is the trading volume? And what is the social sentiment? Now, what I mean by this is there are two comparisons that happen here. The first comparison is that if a project is already having, let's say, $20,000 in liquidity, it will be very wrong to go and compare it with the first 5 base pools or the best performing pools on Uniswap. But also, we will be doing that. And also comparing it with the like-minded projects. So if you are putting in money into a project where it can go 10x or it can go to nothing versus you're putting in money in wrapped ETH where you think it may go to something or you just buy and hodl it, right? That decision-making parameters are different. So we are going to do a comparison with both these pools as to, okay, you compare it with the best performing pools and you compare it with the like-minded pools. And what do you think, right? This is what score it has gotten. Do you still want to go ahead and invest into this specific token? And at the same time, you also have the sentiment analysis. So at the moment, we have integrated with Twitter, right? So it's going to go in and look at all the posts that the project has made. It's going to do some heavy lifting on the contextual learning, and it's going to go and tell you that this project just talking bullish, or are they, even tweeting that we have launched this, right? So it's going to go and understand what promises are being made, what launch has been made, what comments are being made, are people actually using it and commenting. So all these kind of data is being taken from the post and it is being analyzed to give that specific score to the project as well. Apart from that, we also have the capital, which is important for us because as a project, I come in and I see, okay, how much loan can I get? So if you own the project token or if you are the project owners and you decide, okay, I want to go in and I want to take in a loan, you don't have to take all the loan. You can go, that's the max amount of loan that you can take. So you go and tweak the loan over here, right? Once you tell us that, okay, I need $1 million, it will automatically come and tell you how much collateral is required and what is the loan term, right? Now, because it's zero interest loan, the projects, of course, are going to take the maximum loan term available for them anyhow, right? But as I mentioned, it's going to be at least from a year until 5 years that the project can, punch in and take that capital. At the same time, I think also what is important is where did it go? Okay, sorry. Yeah, is the AI assistant. Now, this AI assistant has nothing to do with ChatGPT or cloud. This is the AI assistant. It's an open source AI assistant that we are working on so that we don't have to keep paying ChatGPT or cloud. It's going to get expensive. But you can go in as a user or as a project and also try to understand your users, right? So as a project, you want to understand, okay, in the last 24 hours, the wallet addresses that bought my coin, what other coins do they hold, for example? As a user, you can also ask the same question, or you can ask, okay, is what kind of holders does the project have? Does it have high value holders who have, a high value portfolio? You can ask, questions about the token. Very soon, this will also integrate with the tokenomics of the project, right? And you will also be able to ask questions on the tokenomics. And Audit Smart is working with us right now on smart contract auditing, where they will give you an NFT badge if your contract is audited through Audit Smart. And as a user, you could ask if the contract that these guys have deployed, does it do exactly what they are saying it does, right? So all these kind of questions can be asked about the token. Now, are we going and becoming an AI company or are we still in Web3? I think what we are trying to do here is we are trying to build a trustless mechanism for both the project and the users to make an informed decision, right? because we do not want the fact where if a loan is given out to the project, they will all rush in to deploy, right? That's it. And how we are going to do that also, I'll talk about it. But they will all go in, try to punch in their tokens. But if the token does not have intrinsic value, just because they have liquidity, you shouldn't be investing, right? So this kind of mechanism adds another level of trustlessness between the project and the user going in. And this isn't going to take a lot of time. By June, which is next month, we are going out with this in a sequence. Moving on. So, as I mentioned, there are certain updates to these states that I will go through as well. But in a sequence, if you consider it in a sequence, we will be launching the Quantum DeX version 1 with L1X swap compatibility. So there will be limited slots available. So there will only be 5 slots available once it launches. And either you buy L1X and deposit it into the pool along with your token if you want to use the L1X swap, or you apply for the POI, which we call it the proof of intent. The whole loan model, we are calling it the proof of intent model. And at the moment, the first slot is already filled up. By 10th of June, we will open up 5 more slots, but 2 more for POI model. And by the 30th of June, we'll open up 5 more slots with 2 more POI models. Our goal is to put 5 projects on the POI model by the end of next month. If there are 3 of them, we will still be happy because we need to test this algorithm. It has to be battle tested. So at this particular stage, we are working with projects that we personally know to come and deploy and give them a loan of L1X coin so that their users coming in, face the least price impact, and also they use the L1X swap as well. Now, as I mentioned, of course, 15 pools, without the loan and 5 pools with the loan is our goal by the end of June 2025. We are working on a marketing campaign now on pushing this thing, right? So what does the monthly demand projection look like? So we'll come to the roadmap and the other stuff later. But what does this projection look like? And I think what is important to understand over here is, let's not put this as a disclaimer saying that okay, if we give out these numbers and we have to achieve them, but let it be like a lighthouse, right? Like a guiding light that allows us to see where we are going. Okay. Again, this is not an endorsement. I'm not showing out numbers that are going to happen, but I'm just giving you a lighthouse in terms of what we are expecting in terms of the L1X coin demand that can come in. I'm just making myself very clear here, right? Okay. So we are starting up with 1 project, as I mentioned, right? Now, how many projects will be added on a monthly basis? So we say, okay, we think on a monthly basis, we should be adding at least 3 projects to the pool, right? At least 3 projects. If we can't do that, I think we look for something else. But anyhow, let's say we'll be adding 3 projects to the pool, medium growth. How many users does that project have? I have put in 5,000 over here. This is actually how many token holders can the project bring in, right? I put in 5,000 here, which is not a very high number, which is 5% of a good DeFi project or a good Web3 project, right? And the user growth pattern, we have taken the S-curve adoption, which says that, okay, let it grow exponentially at the start, and then it kind of flattens out, right? In terms of the demand, what kind of demand is these kind of users bringing in? If there is medium demand, low demand, very low. And we can see all the numbers anyhow. When that happens, right, when these kind of numbers come in, if you look at this box over here, the metric, which gives you monthly demand of the L1X coin over a period of time, we see that if there is a user, medium user with $125, right, coming into the ecosystem on a monthly basis, in 6 months, we should be grossing in $2 million worth of L1X coin demand per month. So it's going all the way from $22,000, right? And it's moving towards $2 million. So of course, these are numbers that we think should work based on the market research we have done, based on the users, and a very conservative basis, right? If we go in and say, okay, let's go high in terms of, okay, we think that 5 projects should come in per month and they should be having 5,000 users, right? Let's say, and we go with heavy marketing and exponential growth. Same thing, in 6 months, we should be netting in $9 million a month. Now, of course, 80 to 90% of the initial liquidity that flows into a protocol comes from the decentralized exchanges. That said, apart from the transaction fees that it collects, we do not have that 90% right now, and this is that 90% what I'm talking about, right? So when I speak about opening up the floodgates, this is what I think we can achieve, right? Conservatively, I feel even if we can onboard 3 projects a month on the DEX, and even if, let's say, you put down the users to 2,500 users with an S-curve adoption for a medium-term user, you're still grossing in $1 million a month of L1X coin demand, which of course will cross-pollinate and grow, across the time. Happy to share this across in the community if somebody wants it. Okay, moving on. Just before I go into the roadmap section, I think it's important to point out a few things, right? We've innovated hard. Like, I was thinking about it, before this presentation, where we innovated bridgeless infrastructure with Xtalk. We rewrote the tokenomics with a release pool model. We need another release pool model for L1X coin demand. And I think this specific loan risk model is the answer to that, right? But here's the truth. The innovation isn't going to go viral overnight. We didn't raise 300 million with a flashy meme and zero tech. We raised 10 million with sweat, systems, and substance, right? And every inch of traction that we are gaining is earned. We've not bought it. We've earned that. Every inch of traction, right? We're not building a paper airplane. We're building a spacecraft. And of course, it's going to take time. You're going to build heat shields. You're calibrating your fuel systems, test engines. But the rocket that we are trying to build isn't going to look impressive on the launch pad, but when it goes, everything changes.
It's a quantum fusion spacecraft,
100%.
just to make that clear.
100%. And I haven't even touched on the quantum stuff yet, but I think the loan risk algorithm, right? I presented to a few projects and they loved it. They loved it. And some of their eyes lit up. Like, we could have 100 grand in liquidity on day one when we start. We don't care. We don't want to remove the liquidity. We want users to buy our coins without any price impact, right? I think that is power to the Web3 projects that don't have the initial capital but have a good team and they want to push, right? That's real power. Anyhow, now the roadmap has gone so big that, whatever we have ticked, that you can't zoom in. So let me zoom in for you. Good news. TaskOn has quite a lot of projects, right? And the most important part about it is, we are partnering up with TaskOn because they've got heaps of projects that have liquidity under $25,000 that will love to come on to the Quantum DeX, right? So we are actually entering into an official agreement with them to integrate the L1X infrastructure into TaskOn. So projects will be able to recognize their own token in TaskOn, reward users as well from there, opening up the doors for projects to come in, for users to come in as well. 3rd of June, we are working towards it, and we are launching the Quantum DeX version 1. And if you create a liquidity pool on the Quantum DeX with the wrapped L1X coin, your token will automatically be integrated into L1X swap, which allows you to let anyone come in and out of your token seamlessly in one click, right? Increasing our swap, increasing our transaction fee, and more importantly, increasing the demand of L1X coin, right? 6th of June, we are going out with the multi-network asset issuance standard and open sourcing the Xtalk. And 10th of June is when the AI-approved loan risk and liquidity adjustment model, the panel for the user, and integration with Quantum DeX goes out. That's the first day this model will allow you to go and trade into a pool where the projects cannot rug you. And a project is going to follow the same pattern which I explained to you earlier to go and deploy their pool. So I think heaps of stuff coming in, and we wanted to launch the DEX, but I was not happy with the way it was, and I think we had to solve a real problem. And giving the projects the power to have liquidity, from day one, I think is huge. And the numbers that I showed you, that if a project doesn't have $25,000, they can't survive, right? It's true. It's true. People don't do high value swaps in these projects, and I think if it's a good team, it's a good project, I think they deserve the opportunity to launch something. So this AI driven smart contract based system is going to change the game for projects deploying on the DEX itself. And the amount of innovation we have done to reach here, I think it's crazy if you just think about it. Okay, over to you.
Yeah, just to kind of, if you want to go back up one more slide, I just want to add in something really quick. So the L1X swap integrated with the Quantum DeX, I don't think that a lot of people, this is why I'm late, because I was talking to a project and I teased I teased what Kevin just went over with them with what you guys just covered. And oh my gosh, I had to beat him off with a stick just to get over onto this AMA. This will bring a lot of projects, and that integrated L1X swap into it not only gives them instant liquidity, gives them the opportunity to instantly swap, but also swap multi-chain. That's going to be huge right out of the gate. I mean, you create a coin, you create your token, create your liquidity pool, you get put into the swap. Now you're off to the races in a matter of minutes, not months, weeks, hours to basically make it happen. I mean, we're talking projects can scale, launch, scale, and grow in a matter of minutes based upon the demand of the thing. So that's going to be absolutely huge. And that's why I said, like, for me, that's why I'm running late, because these guys had that aha moment of like, oh my gosh, this is going to be huge, right? And I agree with Kevin. I think that the this pool initiative that he's kind of rebuilt is going to open up a lot of doors for us as L1X holders altogether, because it's really going to start creating that flywheel effect for us to start creating tons and tons of utility because of the amount of use cases that could go off of this as well. And my brain has just been kind of going nuts over the last week. I've actually been reaching out to quite a few projects that I've met on the from the X spaces, and because when you talk to these projects, there is a lot of different synergies that we could, but nothing is like, you'll come across these projects like, oh yeah, that would be nice to have, but it's like, is it really something that we need to implement now rather than later? And some of the projects that I've been speaking to are some of these ones that have already been established. They've had their heyday and they've had like the whales just dump on them, and which has made the price of their token go way down. And this is almost like a lifeline for for those OGs in the community that aren't the whales that dumped, that are still holding the tokens, praying, hoping that eventually more liquidity will come in. And this is kind of like that for them. So if you think about it from a small business perspective, cash flow is king, right? And uh, a lot of companies have like a line of credit, especially to make payroll, and so that they can cover payroll for while they wait for their invoicing, their receivables to come in. And so if you think about it, this is almost like a line of credit for them, so that they can establish the liquidity that they need to keep thriving, pay it back over time, pay it back once they get more liquidity coming in, because it's all about the liquidity to keep the things in motion. And once that kind of gets going again, it's really easy for them to kind of build up that momentum. And then as they start bringing in new liquidity, get this paid back. So it's like an instant line of credit if you look at it that way, which makes more sense. And again, that's why that's why I'm running late. These guys had tons of questions. They're all excited about it. So I think for us, kind of fulfilling that 2020 project thing, It will be a little bit of a grind for the first little bit, but I think once people start seeing the full fashion of what this could bring for them as a community, for an ecosystem, it's going to be paramount. And the instant multi-chain component to this is going to be huge. So if you're listening in on the X Talks kind of thing, you'll notice over the next week, I'm going to be shifting a lot of the narrative to this and talking more about it, because we're going to be rolling it out, because I think this is one of the most powerful things that we can offer through the DEX technology type of thing. So, all right,
Yeah.
I'm off my
Yeah.
soapbox. So if you
No,
want
all
to go
good.
to
I
the
think,
next slide.
yeah, just to just to complete that, we were on a call today, with all the developers, and I was explaining to them where, we are finishing up the last bit where, you swap out from any token, you get the wrapped L1X, and now they're going like, okay, let the user decide and swap into the token. I said, no, it has to be one click. I decide I want to go from BNB to, let's say, MICA token on L1X, one click, no more than that, right? 60 seconds, one click. That's it. That's the benchmark. And if you can't do it, I got to go back to coding. But that was the benchmark. And I think by the time it happens, by the time we need to launch, it'll be ready to go.
Yep. And I think you brought up a great point there. We, as a collective of builders in the Web3 space, are creating our own complexity, right? So there was a great use case of what you just said, Kevin. Having to click here, then having to click here, and then having to swap this and that. We create so much complexity as developers. And this is one thing that I appreciate about Kevin, and we've been on the same page for well over 3 years now, is one click, simplicity, putting a lot of the complexity under the hood, because that's what it's all about. And as soon as we can start cleaning up a lot of this stuff, it's going to be paramount. And that's where I feel like L1X can take the lead, because when it goes, not only having it on chain within your own ecosystem is one thing, right? You can control that. Any developer can control that. But when you start adding in elements such as like cross chain swaps and this and that, that adds just a natural layer of complexity. But no one else can do this as simple as us, with the amount of security, decentralization, and cost. No one can touch us, right? And I think that that's a great opportunity for us to kind of lead the charge from a user experience standpoint. So I'm glad you brought that up. That's going to be paramount for us with this.
Cody, you're so right. I mean, when you look at it, you get people have jumped on bridges and they sit there and they go, oh, am I sending this to ERC20 or is it BEP20 or what is it? And they don't understand the technology behind it. Why should they have to think about that? It's just crazy the way these companies do it. And I think sometimes they do it because they, on the back end, when it's a failed transaction, they can go in and reclaim it.
Yeah. Like I had an example today, or not today, but yesterday, where I was trying to swap into a specific USDT format, and I don't know why, but I got on some freaking, it was labeled wrong or something on the swap, the thing that I was using the protocol for, and it gave me like a wrapped version of what I wanted. So then I had to come over to L1X and like basically swap it to the right thing, go back to the protocol, and basically and implement it. And trust me, I DM'd the person on Twitter that asked me to test out their protocol, and I gave them honest feedback. I was like, guys, you just need to come to L1X and just let us handle this for you, type of thing. So, which is another great way to kind of start the conversation with these projects, right? And so, Mike's right. For us to be able, who knows what you're supposed to actually swap into, kind of thing, and how many of us, even us OG guys that have been in this for well over a decade now, are still making mistakes when it comes to this or that, right? But this allows us to really remove a lot of the complexity and just make it simple. I mean,
I agree.
it should be a no-brainer, right? Why not make it simple? So, anyways, sorry, keep going. All right, from a response standpoint, I love it. I love it. I don't know if you guys can see this, but like Kevin said, he'll kind of share this out. But there's a lot of little green ticks on these different boxes on this list, which is great. That means we're up quite a bit. Just to kind of give a call out, Our engagement rate is up 12% over the last 2 weeks. Reposts are down a little bit, but I'm okay with that because we get more natural, we get more bang for our buck when you guys actually go in, like, comment, and from like L1X posts, which gives us that 93% increase on replies, which is amazing. Kudos to you guys. This is all you guys doing this. We appreciate you from the community. That kind of stuff, if you notice from the blue lines on this graph, on this upper graph, is the amount of organic impressions that we're getting. So as you can see, it's just been picking up quite a bit over the last 2 weeks. So kudos to you guys. It's been all you. Shares as a result has actually come up. And when I was looking at the statistics, about 80% plus were non-L1X followers, which is great. That means we're definitely tapping into some new audiences of people as well. So the other good part is I haven't seen a lot of bots. I've seen a few, but not like we have over the course of the last probably 60 days. So the last 2 weeks, things have been kind of getting cleaned up a little bit, which is great. And as you can see, we're starting to see a lot of momentum again. So we're starting to get back in the good graces of X algorithms again for being able to get organic, evergreen kind of reach. So keep it going, keep the bots out as much as possible. Let's kind of try to keep cleaning that up. Go on to the next one. So the main thing I wanted to kind of call out was just the amount of responses and replies. So if you look at the last 2 weeks versus the previous 2 weeks, night and day difference. And so I had to throw on there a little Scott moment for you guys because it's one of those proud papa moments for you guys as a community. You guys listened, and as you can see, we are seeing the results of this. So kudos to you guys. Appreciate you. Again, this is all you for getting in there, jumping, and helping push the wheel in a unified fashion rather than just going out trying to make noise, right? If you want to go on
And
to
there's
the
also a
next
photo
one.
of Cody,
Oh,
what he looks like with hair.
nah. That's you with hair, man. So call outs this week is we're still hitting about 2 spaces per day average. We're also getting, when we do host spaces, we're getting about 400 to 600 live listeners on our spaces. That doesn't include the amount of people that are going through and listening to it later on, which is great. We appreciate you guys coming in and showing support, jumping in, leaving comments on the threads, asking questions, all that kind of stuff to help promote it. It's been great. I've actually been approached with the 10-minute pitch show to actually do a later in my day, so it would be like early morning for some other parts of the world. I've been asked and approached by not only a few projects, but the X co-host platform that we do use to help us promote this. They've seen a lot of pickup and adoption of the platform or the format that we've created. So they've asked us to consider doing a second show, but later in the evening to kind of tap into their other audiences as well. So we'll be looking to do that potentially over the next couple of weeks, which will be huge. If you want to go down to the next one. Oh, we also participated in another Dash Pay and Litecoin space, which was huge, talking about the Lightning Network. We have actually been invited back again for the 3rd time. I need to get Kevin on one of those. It is a little bit of a late night call for him, but maybe we can spice him up with some Red Bull and give him some energy there because I think he would absolutely kill it in front of like a 21,000 K audience type of thing. So
Always up for it. Always up
yep,
for it.
yep, we'll get you on there. So go on to the next slide for me. So again, we appreciate you guys promoting us. We've got some great topics coming up. with the X Talk every Tuesday at 10 a.m. Eastern Standard Time, the 10-minute pitch show. I'll let you guys know when the other 10-minute pitch is. And the cool part is we're going to start trying to bring in a lot of these early people coming onto Kevin's DeX thing that he just went over. We will get them on some of these spaces so that you guys can start getting a flavor for them as well and start helping them promote their projects as well. I'll let you guys know when the new show's coming up. Yesterday had a good conversation with the X co-host network that we utilize to help promote our spaces. They want to give us recognition. We are one of the very top projects to be on that network. Just to kind of tout, they have a new feature that they just rolled out this week, which allows subscribers to basically follow us. We have the highest subscriber rate out of anyone, and there are a lot of OGs in that space that do a mass majority of a variety of different spaces throughout the week, and we're just killing it compared to them. So again, it's all because of your guys' love and support that you give us on those spaces. So greatly appreciate it. They will be doing a highlight AMA on us and kind of talking about our journey with them coming up, which I think will be very, very beneficial for the L1X brand and XTalks brand. So I'll be sure to drop a post in there so that you guys can turn up and help support us in that, because that is a massive win for us. They are a very big network of hosts and speakers as well. And to be kind of called out on that is actually a pretty big thing. So again, I appreciate you guys. So things are looking good. Got some great synergy coming up, and definitely looking forward to the upcoming weeks.
Excellent. Right. So I think we've seen some pretty unique numbers coming out. We've just seen Bitcoin breaching what was it, 111K already, and I think it's still sitting at 111,262 at the moment, which is amazing. And I did actually make a call, I think a few weeks ago, about Bitcoin going past 100,000. It's proven true. I still think there's scope in there for Bitcoin to hit 150,000. Now, sort of anticipating there might be a climactic move in the current trend, that there might be more all-time highs on the way. I don't think it'll happen in the way most traders sort of expect. And I think the main story over the coming days is around the downgrade of the US credit rating. While it remains very high, the change marks a significant precedent. And I think it's the first of those big moves in the last 15 years. The other interesting thing is around Bitcoin, and we'll focus on that a little bit because that's obviously driving the market. The retail traders are pretty much disengaged. The broader public is showing very little interest in Bitcoin at the moment. And that just tells us really simply the demand is being driven by institutional investors. Now, so what? Okay. What it means is that those institutional investors are going into Bitcoin. The private investors are heading into the altcoins because Bitcoin's just maybe a bit too high for them. It's a bit scary to get into at that sort of level. But I think it bodes well for us and for all the other coins out there and tokens to actually start performing better as well. So and we'll move on to the next image. Thanks, Kevin. Yep. To the L1X coin chart. Now, interestingly, we've seen the L1X price is actually has increased by about 50%. With a range of around $22 to $23, and that's a resistance zone. And from that, you probably see a little bit of a rebound. And we have got a little bit happening there at the very end of it. With Quantum DeX on the way, we're introducing all those features in AI that Kevin's been going through earlier. The other projects coming on. We're seeing some very unique capabilities that's actually going to enhance the price. And now, Kevin, with the loan model for projects, I think it's going to start introducing some pretty amazing things. Cody and I have just been on those calls. He was late. He hung on. We're making some really good progress and a very good team that we're talking to. And I think also our listing on Coin DCX is having an impact. And if you just look at it really simplistically, Coin DCX, let alone the other exchanges that we've got coming in Indonesia, etc., what's that, 15, 16 million users, daily users on CoinDCX. You take that by $100 worth of L1X. That's a lot of people buying. So that's what we're heading towards. That's what the focus is on. How we bring those people on board and giving them a reason to. Those projects will give them a reason to. We've got MetaCity, Mega AI, where people can actually do that analysis. Cody and I were chatting a little bit about the technical analysis side of things, where people look at it and go, well, I don't really understand what that chart is showing me. By introducing that AI, you can start interpreting and learning about how to use that technical analysis. And as we progress forward with those, the AI capabilities around bots to enable that trading and online, the AI-based trading. And that's it for me.
Yep. Awesome. Yeah. I think it was quite a long AMA. With regards to a few pointers, my closing points. The first one I think is I was speaking to someone who leads a pretty big organization and is not the founder, but he leads the organization. And I was explaining to him the whole thing, right? And I think one of the comment that he definitely mentioned was you just need that one strike right now, because all this while we've been preparing very hard for it, and that one strike is going to turn things around in a very different way, right? And the other angle to that was the price of the coin, right? I think the coin price being $20 right now, and that puts the FDV, if all the billion coins were out, at $20 billion. And I think one of the things that we probably need to understand is we are moving into a zone right now where the users on these projects will be betting on these project tokens, where is it going to be 100x, is it going to be 50x? No one right now is asking the question, is L1x going to be 50x or 100x, right? If that happens, that means you're the second biggest crypto in the world. And I think even when we consider the L1x price at $10, $15, $20, at $10, if we do not, if we can't maintain that price, one of the hardest challenge we are going to face is, as a new user coming into a project token and not knowing much about L1x, they would kind of have a confusion as to, sorry, I think there's a background noise. Okay. So they would have a confusion as to, is this layer one even validated, or is this even worth it or not? So all those errors that you see on CMC and CoinGecko, they're all going to go out. They're purposely being kept over there right now. But in the coming time, I think one of the most important question is that how do we maintain that valuation, right? When these project tokens are being built, people will buy these coins to flip them, maybe, or just buy them because they believe in it. But the underlying infrastructure has to be worth something, right? So I wouldn't be too hung up on the price. But again, as I mentioned, with these new projects coming on and the loan risk model, I kind of put the loan risk model, a level up than the release pool, because what release pool did to us in terms of maintaining the value and a slow growth there, very well, the loan risk model could put in the liquidity. So if release pool maintained the price, the loan risk model will get the liquidity. And I think both of these working hand in hand. And when this model is, ignited a bit with marketing and put forth in front of projects that, we are aiming for 20, if we aim for 200, 250, and when if it happens, right, with the marketing ignited and all the infrastructure is working well, you don't know what the price could be, right? And we are not too hung up on that. But more importantly, we're working on making sure that the liquidity into the network flows in, the release pool also flows in. And that's what we've been doing here, right? We've been sitting up here 16, 18 hours a day, and we're working our asses off to make sure that we can do that, right? And as I mentioned, with the Quantum DeX coming up, which is our first attempt, through the foundation to change the DeFi landscape, extending to change the DeFi landscape, we are very optimistic as to it's going to bring in good results. And we are going to do it again, one firm step at a time, right? So we are not rushing into anything. We are going to do it one firm step at a time. We are going to open up a few slots. And as I mentioned, the community has been great. They've been very optimistic. And of course, you're going to have some people complaining. I mean, as I mentioned before, users are also, or people are also, complaining to God. We are still humans. So I think that's pretty fair enough. But majority of the community, has been loving it. They're fully supportive, and that's why I think we even got the permission or approval to list on the biggest exchange in Indonesia. So it's really helping. Thanks to all the community members for continuously pushing it. And once the Quantum DeX is out, and once we start seeing some projects in there, the loan model working correctly, and we open up the floodgates for the release pool, turn on the knobs. It's anyone's guess after that what those numbers could be. Yeah. Any closing
Absolutely.
statements, Mike? Yeah.
No, I think look, we're seeing starting to see some amazing changes in crypto. Seeing the adoption. That we've still got the influence of the orange man out there in the world. That's not going to go away for another 3.5 years. I was chatting about that. Cody's made that statement earlier today to me. But what we are seeing is we're starting to see a lot more adoption of that in the, especially if you look at the institutional side of it, institutions adopting Bitcoin. That's just the start of it. So we're going to start seeing that growth, and people are going to start wanting easy ways of doing it, because when you introduce that complexity, it comes back to Cody's talk earlier. When we can reduce that complexity, people are going to start adopting it. Full stop. There's no other way to describe it. When they understand it, if you sit there and start talking to people about public keys and private keys and what network you're on, and you've got to swap across between BNB across to ETH or to wherever you want, whatever you want to try and do with your transaction, it's confusing. Simplify it. You start getting institutional adoption, you'll start getting retail adoption, a much, much bigger retail adoption, and people then start understanding security. Comes back to the quantum side that Kevin's working on. Now, we all know that without all of that quantum resistance, there is going to be a big problem out there, and not just in crypto. As I've said before, it's going to happen in traditional finance as well. Imagine your 8-character password or 10-character password is going to be breachable within a millisecond. You should be scared. We need it. We need that security, and that's what we're introducing.
Yeah, just to kind of add to that as well. I mean, talking with a lot of these projects about, even on X Talk, some of our roundtable discussions kind of floating the idea of quantum resistance and security around it now. I mean, half of these projects aren't even thinking about this kind of stuff, right? And so for us to kind of lead the charge, it is a unique opportunity to not only kind of lead the charge in that, but also open up conversation with existing projects. Because really, in an essence, it allows them to keep allowing them to focus on what they do best and what they're currently doing without having to make a major shift change, especially if they partner with us, integrate with us, that kind of thing. We'll take care of all that on our end. And it's driving a lot of interest and a lot of curiosity, so to say. So still talking with about 2 to 3 projects immediately right after AMAs that I participate in. So the L1X brand is definitely growing. We're getting a lot of notoriety, like I said, with the X co-host thing, with the amount of success that we've had there. We're being invited to a lot of bigger AMAs, like with Dash Pay, Litecoin, things like that. And so it's only going to keep growing. And to Kevin's point, it's that grind, and we've all been, if you've been an entrepreneur, you know that it's all about the grind, and then that grind will eventually turn into an overnight hockey stick of growth that you can't control. It's just out of sight, out of mind, and it just goes viral for you. And it's an exciting time as a business owner, entrepreneur type of thing, to kind of see the fruits of your labor come to fruition. But on the flip side of that too, it's like, oh shit, can we handle this amount of growth? Type of thing. I've worked on projects that we've crashed servers, crashed apps, crashed a lot of different things because of the amount of traffic. And I really hope that we hit that here very, very soon. And I know we will. It's just a matter of, like Kevin's point, time. And we're doing the grind. We're being the foot soldiers. We're getting out there doing the thing. And I mean, that's with any business. You get these unicorn type of things that come in and they have all this money to throw at KOLs and projects and stuff like that. But if you look at history, eh, to Kevin's point, I loved what he said. We've earned every single step in this process and in this journey. Where if you look at these other projects, once the money's gone, so are the projects, so are the users, and so is the momentum. And so that's why we're seeing a lot of different projects just go dormant because there's no liquidity. When there's no liquidity, there's no volume. When there's no volume, there's no interaction, and just becomes dead, right? So that's why I'm really bullish on this new lending kind of thing because I think it'll breathe a breath of fresh air into a lot of great projects that unfortunately got the short end of the stick when it came to Wells dumping on them. So
Yeah, I think the lending pool, right? That is actually DeFi. Because, for example, if any project that wants to like lend assets, it's a smart contract, and smart contract is the heart of DeFi. If you see, right, like it's pure mathematics. Like anyone who knows how to code or like just wants to see or like just put that in Chat GPT, they exactly know what's happening over there, what project has used it, and they can know like what's the outcome. Like, is it a rug or is it just some ordinary smart contract that is taken and it's just gonna disappear. So I think this lending feature, right, it's just gonna bring us more projects and the ones who do not have an opportunity. So looking forward to see them with us.
Yeah, yeah. I think you're right, and I mean, the biggest thing is that we don't fold back. We hit hard, harder than than we fall, and I've always learned that since a kid. I've been doing that, never fold, right? Always hit back hard. And with the loan risk model, I think that's definitely going to be the release pool version for us in terms of bringing in liquidity into the release pool, right? So it's like building on top of each other. And I've been speaking to quite a lot of projects, and the model that we build is very much in tune with what the market requires. And of course, that is going to solve one part of the puzzle, which is a project can launch on Quantum DeX, and it'll open up a gate. Okay, now you can launch your swap is integrated, but also the other hand, how do they push the users forward, right? How do they bring in the users? And I think nothing can replace utility when it comes to that, right? Long-term utility, short-term utility. And I think the projects that we have right now, the 6 of them, which are almost in the final stages of development in version 1, all launching up one after the other in the coming month. That in itself will prove that okay, we've solved the piece of puzzle where okay, liquidity will come in, project will go and want to deploy on Quantum DeX. But the other hand, there's this utility where it keeps on going, right? Yeah. So again, the anti-rug thing in there is sweet because that kind of proves that we are following up that model. And I'm very excited to see the numbers in the next 8 weeks, what comes out of the Quantum DeX and the loan risk model. I was speaking to this enterprise, last one, I was speaking to this enterprise and I was explaining to them about the loan risk model, and they're going, hey, this is crazy. Can you show us the code? How does it work? It's like, of course, you sign me a check of $250 million, you get to see the code. But I think when that goes out in smart contracts and when projects see that algorithm, the algorithm isn't going to be shown. The algorithm is our secret sauce. It's a secret sauce of L1X Foundation. But it's all on smart contracts, right? You borrow money, you lend money. That ownership is on smart contracts, and we are very excited to build the L1X intelligence layer that anyone can plug into. All the applications can plug into and make decisions based on that. So it was a requirement for the loan risk model, and then we kind of said, okay, this can be used by the other projects out as well. So the question as to when is the release pool going to start selling more coins, I think we have answered that question. And if you waited so long, wait another 4-6 weeks and you'll start seeing that push in the release pool, because now not only us, all the project tokens are going to get together and sell L1X for us. Okay, I think that was a pretty long AMA or a webinar, and we'll share all the information, shortly, as we keep going. All the videos will be shared out as well. If anyone wants that link, what I just demonstrated in terms of the numbers and stuff, please let us know. We'll share that link as well. But until then, thank you for all the support. And yeah, we will see you guys in the next one.
All right, guys.
Thanks, Kevin.
See
Thanks,
ya.
Cody.
Have a good one.
See ya.